Tonight we will begin a news series highlighting trading signals capable of forecasting future movement. Hello everyone, I am the Stock Signaler, and I have built multiple algorithms and set up backtesters to determine likelihoods of future movement. There are a few open signals currently for Apple that indicate potential future movement. The first algorithm signal is the closing price having gone above the 50-day moving average, which according to my analysis is a bullish indicator. While this is a natural bullish indicator, it also has success as a bearish indicator as well, which we will go into. My data states the signal has triggered 354 times. And this is what an overview chart looks like once those triggers occur. A success in this circumstance is considered when the maximum gain goes above basically whatever the signal price was at the close. The minimum gain seen here is 0.07%, and the maximum gain over the next 10 bars, in this case it's 10 trading days, is 83%, which was most likely quite some time ago. Now, something else that I've also seen in my studies is what I call a signal delay. Sometimes a signal occurs, however the signal movement may not occur right away. Most of my algorithms are reversal indicators. However, some are continued impulsive movement where the stock will continue to move in a direction that it has been moving. So the next 10 bars could present a high, however they may see a low before they actually reach that high. So in this case, how to read that, the delay rate is 67% of the time. Prior to it reaching a new high within 10 days, it actually goes down and then it goes up. So in this case, the minimum and the 75% of the time, the delay is on day one. 50% of the time, that delay is within the first 2 trading days. Now, the maximum delay that has been observed over those 350 some opportunities is a low on day 8, which later resulted in a high sometime after day 10. So we'll take our data and we'll kind of look at a chart to see, okay, what does this look like? As it loads, it's going to load target prices over the next 25 days. I'm going to knock it down to the next 10. We'll zoom into our area here. And basically what we're looking at, here's all the movement coming in to where we are. The signal is right here, the signal at close line. And that was the closing price on Friday at 191.56. Basically how to read this is the lower red boxes is our delay zone. The large red box is where 100% of the delays occur. That smaller box is actually where 50% of the delays occur. And the other area, so if you take the bottom of that small box and then you move it back up to the top of the red box, that's 75% of all movement occurs in that short area. So basically, right now, 75% chance that the low we see is above 185. There's also a chance that we don't see a delay at all and we go straight into our green boxes. The large green box is 100% of the movement. That smaller green box is 50% of the movement. And it looks like Apple could go maybe up to $210 per share. Something around 200, maybe 204 at the most is probably what we're looking at. But that's how we would read the data and what could happen based on the signal here. Now we'll also look at another indicator on 162 results for our super trend. Here is the chart. So it has a 95% success rate, meaning that once it signals, it moves above that signal price 95% of the time. Over the next 25 days, 96%, and the rates keep going up the longer that this thing is going on. So we'll take our same data and we'll go look at the chart. Load the chart in. Once again, it starts off at next 25. We'll zoom into 10. All right. So same concept. We're looking at a low somewhere between 185 and 190, all to occur before the 24th of January, most likely. You see your little low in there. And then it should attain a high sometime before February 2nd. It should top out in one of these green box areas. Now, another concept to see how this works. Also looked at the hourly data. Now, there were no hourly triggers on Friday. We had 4 triggers on Thursday, 3 bearish and 1 bullish. The other ones have already occurred. They saw their downward movement, so they were all successful. I decided to look at the bullish one, 329 results, and we will open up the chart. Now, in this case, over the next 25 bars, it said we would come down into the red box area, and then we would move up into the green box area. As you can see, all of this movement has already occurred. So the signal occurred at 188.92. And then we achieved our lowest point was right here, 188.51, where it appears to have bounced perfectly off of that 50% of the time box. So it reached a low, and now it moved on to a high. So its highest point so far was at 13:30 Eastern Time on 19 January at the high of 191.95. Now, how to read this? There is a chance that it does come down again. Over the next 25 bars, it could go below that original low, and then it could go high again, or that would kind of change some of our other numbers, or we could just continue to go upward, or we can go up for a couple more bars and then maybe do a slight pullback that never makes it into the red zone, and then it can go up or down from that point. We're just trying to forecast the next 10 bars and see what we're looking at. Now, what I did back to our trading view chart is I actually plotted our target zone. So basically we're looking at a high somewhere up in this green box by February 2nd at the latest. So the Fed is next week, so we could be up until the Fed. Right now I'm looking at a possible market top occurring sometime next week. With the Fed being in the middle of that, it could be Fed induced. The other thing that I study is wave theory. I operate on a modified wave theory, but if we call this as a starting point, mark 1, 2, 3, we may have a new high maybe on Monday morning, and then maybe come down for a wave 4, and then we could get our 5 again. So just as we saw that the indicators are bearish and bullish back here, so we have the bull path. Now the bear path, if we load this up, and while that's crunching, we can take a look at what else we're looking at here. So if we move up, we come down and do something, and then we do our final top there. I mean, I'm thinking probably no higher than 204. 4 could be, over here somewhere. Whoops. But we probably will see something along these lines over the next couple days. All right, so he loaded in, and now in this case, he's saying, hey, we're going to go down. So he says we could go up, so day 1, day 2. So he's going to have a reversal probably at day 1, day 2. So Apple should go up Monday, maybe Tuesday, and then it could come down again. Now all it has to do to come down is it only has to break below 191.56. That was the signal price. As I mentioned earlier, coming back down, hitting 185 on my chart over here, probably not likely. All he has to do is come back down to 191. So he could actually, as long as he stays above 188.51, he would not trigger a new low into this red box. So he could go up probably to 195 or so, and then do a slight pullback to maybe 190. I don't know if he's going to come all the way down and hit this box. He could hit this later on, right? So this is a 25-day box, and it runs through the 20th of February, and then the entire 25 days goes to the 26th of February. But he could go up in here, and then he could come down into the green box and do whatever from that point forward. So I kind of use all these tools to forecast and take a look at where we're going, what the movement could look like. But as for now, I'm thinking Apple will probably have a up day on Monday, maybe a little retrace to occur later this week before reaching its top, and most likely a new market top by the end of next week. And that is all for the Stock Signaler with Apple.